We like family offices because I have a family office myself. And I think the goal of a family office is to preserve the legacy assets for the next generation, to continue the family wealth. And in order to do that, you have to make investments that have lower risk and also are yield income generating. So preserve your capital, but yet have the opportunity to increase yield on those investments. And I think that in order to do that, you have to have an option to exit. If you buy into a property and you don't have the ability to exit the property, that means if anything happens in our economy, if anything happens in terms of political situations, and you did not have the chance to get out, you're putting your family legacy, at least that particular investment, at risk. One thing we like about digital real estate is that you are buying something that's managed by someone else that is proven to have a track record of success. You're buying an investment asset that's more liquid, like a stock. So even though you're putting a lot of capital into it, you can diversify it into different properties. But I think the really most valuable tool is that liquidity option to get out. So for example, if you have bought into $40 million worth of hotels that happen to be in New York and Boston area in 2021, and you're long $40 million in the hotels with a traditional investment, there's no option to sell that investment. You're just waiting for the developer to finish their cycle, sell off the assets, and return your capital. If COVID hits, and COVID did hit in 2020, right? Well, at that point, you couldn't get out. And the value of hotels dropped significantly. In some cases, never recovered. So if you're in a family office and you bought a bunch of hotels and you got hit with COVID, it's probably a big chance that you've lost a lot of money in those investments today, because not many of them bounce back. Flip side, if you bought that same investment in a digital profile with digital securities, you own the same exact type of asset. You're probably getting a little bit better yield on that asset, but you have the option to put it on the market and offer it for sale and let somebody make an offer to buy it from you to get out. And I think that optionality for exit, for liquidity, is priceless. So if I were a family office, I would really consider looking at the type of investments I want, whether it be hospitality, multifamily, or any of the food groups in a digital form as well as in a non-digital form. So you can compare the difference, but at least even blend your investment so part of it's non-digital and part of it is digital. So if you have to pivot to get out, you can do so. Without that, you're doing your family a little bit disjustice, in my opinion. So that's exactly why if you came to RedSwan and looked at our profile of assets that are available for investment, you're buying assets that are, in our opinion, lower risk, but also have that liquidity option. So you're saving yourself from a potential disaster down the road. This is kind of like future-proofing your investment with a little bit of insurance that you can get out, which is a smart decision to make.